Hi, everybody. Welcome to the Altius Research Market Recap. So today we're just going to go over, we'll do a market recap, go over some of what happened in global markets today. We'll cover some new positions that I took, and then also cover some recent geopolitical events that have taken place. Um, so let's start with just a breakdown by sector. I mean, it was a pretty ugly day today across the board. You could see every sector was red. Tech was down over 1%. Consumer staples the worst. Consumer discretionary almost just as bad. Banks were down. I did see that um, Blackstone and some of the private equity companies were actually up today, which I thought was kind of interesting to note because they've been so beaten down, and they got a little bit of a bounce the last couple days. So we'll have to see if that holds up or not. But but yeah, I mean, looking across sectors here, it was ugly everywhere today, and the market just kept selling off all day long, right up into the Fed meeting. So that was the big event today. Um, Powell spoke. He did the monthly FOMC meeting at 2 p.m. every month. They do it, and there were no. So, like, if you don't know, I mean, I'll try to bridge the gap here between day traders and longer term investors. So basically, the way it works is every month the Fed has a meeting and they announce whether or not they're changing interest rates and what their projections are for future meetings. So going into today, the current target rate was between 3.5% and 3.75%. In Fed speak, they say 350 basis points, 375 basis points. So that was 99% priced in, like that was the probability going into today's event. So there was no surprise there. So they held rates steady. But then what you could do is if you go to like the Fed Watch tool on CME Group, if you put that into Google, you could look at it and you could look here by the date and see what's priced in for the future. So for the next meeting, it's also like 100% to hold rates the same. But then if you go out to, let's go out to September, you can see that there's almost a 30% chance of 325 basis points to 350 basis points. So that's saying that there's a 30% chance that there will be one cut by that September meeting. Um, and then, I mean, it's kind of surprising because Trump talks so much about cutting rates that you would think that that rates are coming down. But I mean, even if you go out to, let's go out to December, even by December, there's only a 38% chance that there's going to be one rate cut by December. So that's there's kind of a disconnect there between what you hear politicians talk about and then what's actually happening. But I mean, I guess it kind of adds up when you see how much pressure Trump is trying to put on Powell. But even with Powell gone, I mean, you could even look further into the future and see what's priced in. So I mean, we could go out to April of 2027, and yeah, it's still only 40% chance of one rate cut by then. So uh, yeah, it just doesn't seem like rates are really going to come down anytime soon. I mean, despite the political rhetoric. And then even today, when they announced no cuts, the first thing that happened was rates started screaming higher. And then when rates go higher, that negatively affects the equity markets because it increases the cost of capital basically to borrow money. So when you see rates going higher, it's typically negative for equities. And that's exactly what happened today. So here you can see it here. I've got the QQQ, the NASDAQ average up. So let's break it down even closer. So yeah, this is just a 5-minute chart, and the meeting was at 2 o'clock today, and I mean it just sold off the whole day. Specifically right after the meeting, though. I mean that's when the selling really started. But I wrote down some comments that Powell made that I thought were worth noting if you don't pay too close attention. Yeah, so there was no rate cuts, so they held rates steady. He did say he expected 4.4% unemployment by the end of the year. And he always talks about that in the context of immigration too, basically insinuating that if we had more immigration, that the unemployment rate would be lower. And that's because they count illegal immigrants in the like they count them as employed if they get a job here. So that kind of like affects the calculation that the Fed looks at. He did also say that inflation projections are slightly higher than they projected in December, and he did attribute that to higher oil prices, at least in part. The other interesting thing today that happened was he said that 4 or 5 members of the FOMC group went from projecting 2 cuts to 1 cut for the year. So yeah, that's actually like a reduction in the expectations for rate cuts. And then another interesting quote that he had was some progress on inflation, not as much as we would like. So yeah, again, that's just a counter narrative to rate cuts. And then I think again why the market sold off today. So like the idea being that if they're trying to tame inflation, I mean the way that you would tame inflation is by raising rates. But it's just it's just a difficult situation for the Fed to be in when they want to tame inflation and then the president is screaming at them to lower rates, because if you lower rates, it's just going to stoke inflation. Uh, but I mean, that's just the way that it is. So yeah, there was a lot of pressure on equity markets today, specifically due to the Fed meeting. But yeah, so bond yields started screaming higher once the Fed meeting started, and then that started sending equities lower, uh, just because they're pricing in less rate cuts. And I mean, that was the story of today. So there's QQQ. Bring up the S&P 500 here. Yeah, so like this is the daily chart, and we talked about this in the last space too. So we came up a little bit the last couple days, right into the 9 moving average on the S&P 500, and then today it was just a brutal rejection and sell off all the way down to right above the 200-day, and then we're a little bit negative in the after hours too. So I mean, it wouldn't surprise me if we just slice through this 200-day and go lower. Because typically what you see at these like after a big pullback, like you could see right here, the last one in November, and then even October before that. If you look down at the volume profile down here, you can see there's like typically what we would call this is like a capitulation wick. So there's like it's basically like a lot of sell volume at the low, right? And there's some selling here currently where we're at, but we haven't gotten that breakout capitulation wick yet. So that could come tomorrow or Friday or one of these days. I would be on the lookout for that, because like we've really just been churning around these around the 200-day moving average for like a couple days now, but we've held it and we haven't broken through. But now we're resting on top of it, and the geopolitical tensions with the Iran situation are just continuing to rise. And that was the other factor today, was oil. Oil was coming down in the morning, but then as the Fed meeting started, it just started trending up and up. Let's see if we could get a closer chart here. Yeah, so we just exploded off the lows, like as the Fed meeting started, and then that was also putting pressure on equity markets, because the last couple days, oil and equity markets have basically just been trading inverse. So like the more expensive oil got, the more equities went down. It kind of traded in that pattern. So pressure from oil also affected the equity markets today, and it's just leading up to a bad situation here. I mean, I don't know. It just doesn't seem like there's much that Trump can do at this point to alleviate the situation. So, for example, not today, but yesterday and today, he was talking about a little bit where he had Besson come out and say that they wanted like an international coalition of allies to guide ships through the strait. And pretty much every ally rejected that proposal, and they're not going to do it. So then I think out of frustration today, Trump was saying that maybe we'll just pull out and then we'll let the allies handle it, presumably to put pressure on them to demonstrate that if we don't solve this problem, you're not going to be able to solve it, and if you don't help us solve this problem, it's going to be even more difficult. So I think they're still trying to push for that, but I don't think that that's going to happen. France said in no uncertain terms that they won't do it. And I think the UK said the same thing. So I don't think that's going to materialize. Um, and then they don't really seem to have a plan beyond that, from what I can tell, to at least in the short term, uh, to curb oil price. But yeah, I think it's just a lot of uncertainty building, and the market just can't handle it. I think that's sort of where I would leave it with the averages. But yeah, I mean, we're basically just sitting on the 200 day, and we'll see what happens. But if you're looking to establish a position, I would probably wait until we get one of these capitulation wicks. If you look at the volume profile, and once we get that, that would probably be my signal to go long. I mean, I've just been holding a like 1% of my portfolio in short dated puts, but the issue is that the puts are so expensive. So like the cost of the insurance is so high that at some point it just becomes worth it to sell it, because like you don't think that the market's actually going to go down as much as is being priced into the puts. And that's kind of what's been going on for the last like 2 weeks. So I mean, even if you did hold puts going into this, the premiums are so jacked on them that it's almost not even worth it. So like I actually closed out like 3/4 of my puts today, um, just to take some profit on those. But yeah, it wouldn't surprise me if we get a big day down tomorrow or Friday, and I would be on the lookout for that. And if we don't, and if we just keep treading water and going sideways, then this could go on for longer than than we're expecting. Like this chop is just brutal. I mean, especially if you look at the Qs, it's been, yeah. So if you look at NASDAQ, we've been in this box for so long. We're just at the bottom range of it now, and it looks like we're going to break below it, which would obviously not be good. But on one hand, it's like you don't want to break lower, but you do want to get that capitulation wick down so that you could go higher. And this is actually an interesting concept that really helped me in my trading career when I understood this. But it's such a counterintuitive point. But the idea is that they have to take it lower to take it higher. And that sounds completely counterintuitive and like it makes no sense. But the way the market works is that when you get up to a certain level, there's no more incremental buyers at that level. So in order to ever get higher than that level, you actually have to take the market lower to pick up more buyers where people are willing to buy and take on more leverage to actually take the market higher. So I mean, you could kind of look at the last month as sort of like a congestion period where we've like digested some of these highs, and then like we came down a little bit here to pick up some buyers, but it just doesn't feel like we've picked up enough to take the next leg up yet, which is why I think there could be another leg lower coming. But I mean, we'll see what happens. I don't know that for sure, obviously. But yeah, I would keep a lookout for the capitulation candle as a long signal. So the other thing that happened last night was South Korea announced a stimulus program for companies that are affected by the supply chain shortages. I think it was specifically related to the helium disruptions coming from the Strait, which we talked about last time. So yeah, I mean, that again just shows a larger point of the only tool that these governments really have is printing money. I mean, that's all that they're going to do. So let's look at Bitcoin here. So that, I mean, that's the main case for Bitcoin long, is that global governments are just going to continue devaluing their currencies and printing money. So Bitcoin had a bad day today, unfortunately, but yeah, it had a really bad day today. But it did, in the last couple of weeks, it did stabilize after coming all the way down to like 60,000, and it closed today at 71,000. So we're considerably off the lows, but it did reject the 9 moving average there pretty decisively. So we'll see how that plays out. But I mean, anytime you see global governments start printing money or doing stimulus or these types of things, or even lowering interest rates, I mean, that's super bullish for Bitcoin specifically. So yeah, over the last couple of weeks, I've been adding significantly to Bitcoin. I sold a lot over 100,000 last year, and I started adding it back. At this point, I've added back about 50 to 60% of what I sold at near the top last year. So I'm rebuilding my Bitcoin position right now. But yeah, I think that's something that's never going to change. I mean, if you read any of, if you read any Rothbard or learn the history of central banking and currencies, I mean, the history of all of these currencies is just that they continually devalue them over time. Uh, and I mean, gold is an option, obviously, and silver and precious metals, but uh, personally, I like Bitcoin a lot. Um, then I did establish a couple other positions yesterday. I bought Enphase, ENPH, and SolarEdge, SEDG. And the basic thesis for these is that they're beaten down so badly over the last couple years. And politically, I expect the Democrats to win the midterms and the 2028 election. So this could be an inflection point politically, and then from a like stimulus perspective, assuming they get favorable solar policies passed. Um, yeah, and I think this is when they would start their uptrend if investors were going to play it that way, because we're still, what is it, like 6 months ahead of the midterms now. So, and the market is always forward looking, so you have to consider that. So I think people will start piling into some of these Democrat aligned companies increasingly as we get closer to midterms, and then we'll see how that all shakes out in November. But yeah, so I added Enphase, which is a solar company. They do microinverters, and then Solar Edge. Um, and that one was actually up today. And I tried to find news on it. I couldn't even find anything about why it was up today, but that chart looks super interesting to me. I mean, it could really get going. Um, so yeah, those were two that I added, and I'll probably do. I did a lot of research on them last night, and I'll probably do a write up one of these days and send that out. So if you aren't subscribed, you should subscribe to the Altius Research newsletter, just ALTIUS research.com. You can just sign up there. It's totally free. I don't charge or anything. And I just post like my highest conviction trades there. So I bought equity and I bought 2027 January calls on both of them. And the way that I do it typically is like for a new position, I'll load calls, and then if those calls start to play out, then I'll add equity, and then trim the calls to establish a new position. That's normally how I do it. So yeah, those were the new positions that I added today. Um, and then let's see. Yeah, there was some news around Rocket Lab did an offering today. I think it was like $3 billion or something. So the stock was down a lot. And then I added some calls for like 6 months out for Rocket Lab. I added the 80s, I think for like June or something. Um, and that's been one of my core positions from like 10. But that one pulled back considerably. It got all the way up to 100, and then it came back down to like 65 the last couple weeks. So I've been adding to that one. Like the thesis for Rocket Lab right now is that it's going to run up into the SpaceX IPO. And I think the SpaceX valuation is crazy. It's like $1 trillion or something insane. And then Rocket Lab is like the primary competitor, or well, one of the competitors. And I think that when people start to dig closer into SpaceX's financials, or start to realize that maybe Rocket Lab is undervalued. And then also in the space trade, there's ASTS. That's another one I've owned from like 25. But I did sell it last year, and then I recently rebought a small position a couple weeks ago. So I'm still in ASTS, but at a much smaller percentage than I was earlier. What else? And then Nebius. Nebius was one that I bought last year. So I monitor unusual options activity. And last year, right before, so okay, let me tell it this way. Last year, I saw a couple $1 million of calls being bought for a few weeks out in Nebius, and it was a name that I had been watching pretty closely, and I'd never seen any flow like this come in before on it. So I was pretty confident that somebody knew something. So I followed the trade. I bought a bunch of the same strikes that they bought. And then after the close, they announced a deal with Microsoft. And then you could see where it was on the chart here. The stock went from like, I think, I don't even remember which it was, which gap it was. But the trade was, it was a 35x trade. It was unreal. So then that's what so then I converted those into equity, and then I've just been holding the equity since then. But they did an offering yesterday, right when it was at like 132, and then they did the offering. It came down to 113. So today I bought a little bit more of Nebius on that pullback. Uh, they're partnered with NVIDIA, Microsoft as a client, so I think of the data center plays, I think Nebius is probably the safest one. Yeah, I mean, I guess that's it for today. Um, Not too much else that I was thinking about. I mean, I'm really just concerned about like the short term here over the next couple days and the averages, and we'll see what happens. But yeah, it would not surprise me if we go lower. Um, but yeah, I would say just have some cash and be ready for whatever comes. And again, none of this is investment advice, so don't don't take it that way. This is just a lot of what I'm doing. But yeah, I think that's where we're at. Let me know if anybody has any questions or anything, and if not, thank you for listening.